You've saved every spare dollar you can find. You've skipped out on drinks and dinners with friends. You didn't go out to your good friend's bachelor party. You have sacrificed a lot of living your best life so you can afford to buy your first home. So that day is finally here. After a lot of sacrifice, you've saved up enough for a down payment. Now that you've saved up for the down payment, what's next? Do you rush out and find a realtor and start putting in offers on houses? Do you start searching for homes online in places like House Sigma or Realtor.ca? Then you suddenly realize, ooh, how much home can I really afford? You start feeling a little lost with all the information you find online or from what your parents are telling you or even your friends. What if you make a big mistake and it costs you a ton of money? Or you have to dip into your down payment because of unforeseen costs. Does this mean you have to take a step back from your dream? Before I start outlining the 4 questions you have to ask your mortgage broker, let me just review some details about interest rates and how does the lender set your interest rate. Okay, let's first talk about how your lender sets your interest rate. Lenders set the interest rate for your mortgage. They consider factors to help them determine your costs. Length of the mortgage term, their current posted and prime interest rate, if you qualify for a discounted rate, the type of interest you choose, fixed, variable, or a combination, your credit history, and if you're self-employed. The prime interest rate is the rate that lenders use to set their posted interest rate. The rates can change regularly. Your lender may offer you an interest rate of prime plus a percent. This is often the case for variable mortgage rates. The posted interest rate is the rate lenders advertise for their products. So that's the interest rate you'll see on their website. Now, what you've all been waiting for, the 4 questions you have to ask your mortgage broker. First question, is the mortgage a collateral or conventional charge? This is important if you need flexibility in the future to shop around for a more competitive rate. A collateral mortgage is non-transferable. So when moving lenders at the time of renewal can come with a large cost and extra steps. Some banks only offer conventional mortgages. I have to highlight something here. Keep in mind that lenders look at a few factors of customer creditworthiness. There are 4 factors that most lenders look at. That's character, capital, collateral, and conditions. The 4 C's, kind of like a diamond. One of the most influential factors is character. So how reliable and trustworthy a client is with money. They determine that by taking a look at your credit score, credit report to decide if they will lend you money. The higher the credit score and clean credit report often indicate decent character, which means a client can generally be trusted to prioritize the agreed upon repayment of their debt. They also use these reports to determine how much interest they'll charge you for the borrowed money. If you have good credit history, you may be able to get a lower interest rate on your mortgage. This can save a lot of money over time. They'll ask you for a job letter, pay stubs, proof of where your down payment is coming from. With these documents, they'll be able to determine your ability to pay debt. The last thing you want to find out is that you don't qualify for as much home as you think you do. If you have to go back out on a deal because you cannot get approved, that could lead to you having to back out of the deal, which could result in the seller keeping your deposit and coming after you for the difference in the money of the sale. Knowing how much you can buy can ensure that you get your dream home. You're probably thinking, why am I bringing up the 4 C's when talking about mortgage or type of mortgage? It's because I want you to keep that in mind. Even though the type of charge is important, you can't forget about the other pieces, which is how your creditworthiness also plays a role in this whole process. These factors will determine how much home you can buy, how much home you qualify for. Second question, can I port and increase my mortgage? This is for someone that currently owns a property. Here's where this question comes in handy. If you are looking to upgrade your home within the term of your mortgage period, like a 5-year fixed term, having an option of porting, moving your mortgage to another property, and increasing your mortgage is really important to you. Communicating your needs and your plans are critical in getting what you want and need. Some lender mortgages are non-portable and others are portable but can't be increased. Third question, what prepayment privileges are available for your mortgage? Some lenders have restrictions on prepayment privileges and some just offer less options overall. The difference between those that have prepayment privileges is the additional amount you can put towards your mortgage per year. That can range from an extra percentage of 10 to 15% with one lender and over 20% with another. Where this comes in handy is, let's say you're expecting a promotion or a big raise or a large bonus. Well, instead of going on a shopping spree, you could have the option to put that towards your mortgage. All depends on how focused you are on your financial goals. Fourth question, what are the penalties to pay out your mortgage? So the reason you ask this is because they will look at the Bank of Canada's posted rate when determining your penalty and not discounted rates. This can make a significant difference in the amount you have to pay if you are looking for a more flexible mortgage. Ask them for mortgage options that have a more client-focused penalty calculation. So I know I said there are 4 questions you have to ask. I have another question you should ask. Call it a bonus question. Yay for you. The question is, what are the current interest rates and how does the lender set your interest rate? So remember at the beginning of this video, I outlined how a lender sets your interest rate? Here's why it's important to know. This question can also be asked as, what is the lowest rate? With dozens of banks to choose from, you can shop around. Just remember, as the saying goes, you get what you pay for, meaning that some low rate lenders will have heavy restrictions on their mortgages and increased penalties. So things like a percentage of your mortgage balance. Okay, so the reason you ask this question is because a mortgage broker will then walk you through the pros and cons of different lenders, ensuring that you get the very best option for your needs. The last thing you want is to be stuck with a mortgage that doesn't benefit you as well. These 4 or 5 questions you should ask your lender when shopping for a mortgage. This way you're going to understand the full picture of what the lender is able to offer and ultimately decide who to go with. Getting the best loan rate that suits your needs can be a great way to kickstart your real estate journey. Finding the right mortgage broker can significantly impact your home buying experience. By asking these critical questions, you're not only able to gauge the broker's expertise and reliability, but also ensure they align with your financial goals and preferences. Remember, a good mortgage broker should be transparent, knowledgeable, and willing to go the extra mile to secure the best deal for you. Don't hesitate to ask questions, no matter how simple or complex they may seem. Your home and financial future are at stake. So it's crucial to partner with a broker you can trust and communicate with openly. Thank you so much for watching. See you on the next one, empowering your first steps in real estate. Bye.